Welcome back, listeners, to Market Movers and Shakers, the podcast where we break down the latest trends in technology, economy, finance, and the stock market with actionable insights for you. I'm your host, and today we're diving into a fascinating shift in the investment world: thematic investing. This isn't your grandfather's stock-picking strategy. It's a forward-thinking approach that's gaining traction, with assets in thematic funds doubling over the past 5 years to $562 billion, according to Morningstar. So buckle up as we explore what thematic investing is, how it impacts markets, which sectors are in play, and what it means for your portfolio. Introduction. What is thematic investing? Let's start with the basics. Traditional investing often takes a top-down approach. You analyze the economy, pick sectors like tech or healthcare, and then drill down to individual stocks based on earnings, valuations, or growth potential. It's a methodical, often reactive process rooted in historical data. Thematic investing, however, flips the script. It's about identifying megatrends, multi-year structural or technological shifts, and betting on the industries and companies poised to ride those waves. Think artificial intelligence, cybersecurity, or even demographic shifts like the aging baby boomers or the tech-savvy millennials. Thematic investing isn't entirely new. Savvy investors have long chased big ideas, but its popularity is soaring as global challenges and innovations accelerate. The catch? It's not about chasing fads. Remember the dot-com bubble of the late 1990s? Many investors got burned betting on fleeting trends. Thematic investing demands a discerning eye for enduring change, not just hype. Market impact, a growing force with risks. The rise of thematic investing is reshaping how capital flows through markets, with $562 billion now tied to thematic funds, up from $269 billion in 2019. This approach is no longer a niche play. It's influencing stock valuations, sector performance, and even how companies position themselves. Firms that align with megatrends, like a cybersecurity company during a wave of cyber attacks, can see outsized gains as thematic funds pile in. But there's a flip side. Many thematic ETFs are narrowly focused, which can amplify volatility. When markets turn turbulent, as they did during the 2020 COVID crash, these funds can suffer steep drawdowns. Remember the ARK Innovation ETF, which soared on tech themes in 2020 but slumped over 60% in 2022 as rates rose and growth stocks fell out of favor? That's a cautionary tale. Thematic investing can supercharge returns, but it can also magnify losses if the trend falters, or if the portfolio lacks diversification. Globally, this trend is also creating disparities. Regions or countries leading in thematic areas, like the US in AI or Europe in renewable energy, may attract disproportionate investment, potentially widening economic gaps with lagging markets. It's a dynamic that could fuel geopolitical tensions over tech dominance or resource control, something we've seen hints of in US-China trade spats over semiconductors. Sector analysis: where the themes are hot. Let's zoom in on some of the key themes driving this investment style as highlighted in the news. First up, cybersecurity. With cyber attacks making headlines, think the 2021 Colonial Pipeline ransomware incident. Demand for protective software is skyrocketing. Gartner predicts spending on information security will grow 12.5% annually through 2028, reaching billions. Companies like Palo Alto Networks or CrowdStrike could be big winners here. Next, artificial intelligence. AI isn't just a buzzword. It's transforming industries from healthcare to defense. Grandview Research forecasts the AI market to hit $1.8 trillion by 2030, growing at 36% annually. Beyond giants like NVIDIA, smaller players in niche applications like AI-driven drug discovery could offer explosive growth. Then there's global infrastructure, spurred by aging grids and data center demand. McKinsey estimates U.S. power demand growth will jump to 3.1% annually through 2040. Companies involved in grid upgrades or renewable energy, like Quanta Services, stand to benefit. Similarly, regional over global spending reflects a push to reshore manufacturing, boosting robotics and automation firms. Demographic themes are equally compelling. Millennials with their digital-first mindset are driving demand for tech and sustainable brands, while aging baby boomers, projected to swell the 65-plus population to 82 million by 2050, are fueling healthcare, travel, and leisure sectors. These aren't just trends, they're tectonic shifts reshaping economies. Investor advice: how to play the thematic game. So how can you, as an investor, tap into thematic investing without getting burned? Here are some practical tips to navigate this terrain. 1. Do your homework on trends. Not every shiny idea is a megatrend. Ask yourself, is this backed by solid data? Does it have staying power? Use reputable sources like Gartner or McKinsey to validate themes. Avoid speculative fads. Think NFTs at their peak in 2021, which largely fizzled out. 2. Diversify within themes. Don't put all your eggs in one basket. If you're betting on AI, spread investments across hardware, software, and services. Consider broad-based ETFs alongside individual stocks to cushion volatility. The news mentions a 3-step process. Identify themes, select stocks with strong fundamentals, and maintain a sell discipline. That's a blueprint worth following. 3. Mind the time horizon. Thematic investing often plays out over years, not months. Be patient, but vigilant. If a company in your portfolio isn't showing progress, like rolling out promised tech, consider cutting losses. Hold for the long haul only if the trend remains intact. 4. Balance risk with diversification. Thematic portfolios can lean heavily growth-oriented, per the Morningstar style box. Offset this by maintaining exposure to value stocks or defensive sectors like utilities. And beware of over-concentration in narrow ETFs. Look for funds with broader mandates. 5. Stay updated. Megatrends evolve. Revisit your themes periodically. A decade ago, social media was a hot theme. Today, it's maturing while AI is ascendant. Keep an eye on policy shifts too, like U.S. reshoring incentives that could turbocharge certain sectors. Conclusion: the future is thematic, but proceed with caution. As we wrap up, let's reflect on what thematic investing means for the future. It's a powerful lens to capture the world's biggest shifts, whether it's AI revolutionizing business or baby boomers redefining retirement. It offers a way to align your portfolio with progress, potentially outpacing traditional strategies. But it's not a silver bullet. The risks of volatility, fad chasing, and overconcentration loom large, as history has shown with past bubbles. My takeaway for you listeners is this: thematic investing can be a game changer, but it demands discipline, research, and a balanced approach. Start small. Maybe allocate a portion of your portfolio to a theme you're passionate about, like green energy or healthcare innovation. Test the waters, learn the rhythms, and scale up as you gain confidence. That's all for today's episode of Market Movers and Shakers. If you've got questions or themes you'd like us to explore, drop us a line on social media or via our website. Don't forget to subscribe for more deep dives into the forces shaping your financial future. Until next time, keep investing smart and stay curious.